Hey guys, I'm Ellie from Epic Scouts. In this video, I want to show you how to use the Average Directional Index or the ADX, and I want to show you how you can use it to time your entries and your exits. Now, the ADX is a technical analysis indicator and it's used to measure the strength of a trend. The ADX fluctuates between 0 and 100, and according to Wilder Wells, the developer of the ADX, a reading below 25 is considered a weak trend. Between 25 and 50 is a strong trend. Between 50 and 75 is a very strong trend. Then between 75 and 100 is an extremely strong trend, which is often considered unsustainable. So the ADX is a non-directional indicator, which is very important to note. It does not show you which way the trend is going. It merely shows you whether a trend is strong or not. And in terms of its calculation, it uses the highs and lows of the bar. It does not consider the close of the bar. So the default setting is usually 14, which means it uses the last 14 periods depending on the time frame of your chart. If you're using an hourly chart, it will be the last 14 hours, and if you're using a daily chart, it will be the last 14 days. The ADX calculation is a little bit complicated, so I'm not going to go to it right now, but essentially the higher the reading of the ADX, the stronger the trend. So let's have a look at what it looks like on a chart. This is Euro Swiss franc chart, and it is the 4-hourly chart. And as you can see, the ADX lingered below 20 from around the 6th until the 10th of Feb. The ADX is this red line below the chart, and as you can see, it ranges from 0 to 100 on the side of the chart. So this means that the Euro Swiss franc was stuck in a range during that time. Then on the 10th of the month, the ADX started to climb towards 40, signaling that a strong trend could be waiting in the wings. And as you can see, the trend remained strongly bullish all the way until the 23rd of Feb, and then began ranging until March. I want to just give you another example so you can get a feel for the indicator. So if you look at this chart of the Swiss franc Japanese yen, you'll see that during April, the price was in a range, and similarly, the ADX was below 20. And you can see that as a trend ensued, the ADX also went up heading towards 40, which suggested a strong trend. Now, as I said earlier, the ADX only shows you the strength of a trend. It doesn't provide buy and sell signals or tell you the direction of the trend. What it does tell you though is whether a trend is gaining momentum. How some traders use it is that if the price is going up and the ADX indicator is also going up, then we have the case for a strong bullish trend like you can see here. So the same is true if the price is going down and the ADX indicator is going up. Then we have the case for a strong bearish trend. Once ADX starts dropping below 25 again, it could mean that the uptrend or downtrend is starting to weaken and that it might be a good time to lock in profits. Another issue that you might find with the ADX is that because it's a lagging indicator, the signals come after the price has already moved. So as you can see here, the ADX shows consolidation only after the consolidation has happened, which means that you may miss out on some of the price action or profits. One way to mitigate this issue is to use another technical indicator alongside the ADX. So I'm going to show you a very popular trading strategy that uses the ADX. It's called the Holy Grail, and it uses the 20-period simple moving average alongside the ADX with the 14-period settings. Now this is more of a swing trading strategy, so it works well over a couple of days. And for the strategy to work, you need to follow these rules. As you can see, this is the Swiss franc Japanese yen hourly chart, and I've got the 20-period SMA and the 14-period ADX. And as you can see, price crossed above the 20-period SMA. It then trends up for a while and retraces back down to the SMA. And the ADX, while it's doing this, is consistently above 30. So as you can see here, price retraces and goes slightly below the moving average. I place a buy order above the previous bar's high, and I place a stop loss below the new swing low. I set my profit target just below a major previous resistance level to give me a risk-reward ratio of around 1 to 2, which is fairly conservative. And I lock in a decent profit. So basically the ADX really helps in determining whether a trend is in a strong or weak phase. And this is very important for us as traders because we always want to trade with the trend. The bottom line is that the best profits come from catching strong trends, and the ADX is a very useful indicator for determining the strength of a trend. Thank you so much for watching. If you have any questions, please don't hesitate to contact us at epicscouts.com or on any of our social media channels. And please remember to subscribe and like. I will be creating some more ADX trading strategy videos.